Roblox is one Cathie Wood stock down 69% that I think you might regret not buying on this dip. In this video, I'm going to talk about why I think that's the case and showing the financial metrics for Roblox to show why I think that's the case. If you're thinking about, what ranking does Roblox stock have in Cathie Wood's overall portfolios? It holds a meaningful position, 2.78% of Cathie Wood's portfolio is in Roblox stock. It's, ranks number 12 in terms of the weighting of portfolio. You're wondering what's number one? Tesla. Tesla stock is Cathie Wood's favorite according to the weighting in all of the portfolios. And Roku, Coinbase, of course, Cathie Wood is attracted to these types of innovative growth stocks, which Roblox, I would say, is an innovative growth stock. It is, the pioneer of the metaverse. It's been a metaverse company, according to management, for 16 years now. So it's a pioneer in that industry. I can understand why Cathie Wood is attracted to Roblox stock. But, one of the things I like about Roblox stock is the very nice revenue growth and the sustained revenue growth. I was a bit concerned about how Roblox business would respond when economies reopened. And I was surprised to see that Roblox retained and is now adding onto the millions of users that it added during the pandemic. So it not only added millions of users during the pandemic, but it's now building on top of that and building on top of the revenue that it gained during that time as well. So you look at its revenue increasing from a little under let's say 750 million all the way up to $2.2 billion. So revenue in its most recent update of 2.2 billion was higher than, in the year that ended January of 2021, which was a year that contained a lot of people spending a lot more time at home, schools being closed, work from home, learn from home, all of that, which was a big benefit to Roblox. So it's impressive that it retained all of those, well, not all of those, but it retained many of those users that it signed up during those early stages of the pandemic. Where it has seen a dip is in its cash flow from operations. You look at this metric over the trailing 12 months, it peaked out at about 720 million around July of 2021, and that's been cut by half to about 369 million. But I really like Roblox's business model as it pertains to generating cash flow. So if you're not aware, Roblox is free to join and use. Customers can sign up for free, play for free. They never have to deposit any money. But if they want to experience some of the premium items, they need to deposit money on the platform and buy Robux. That's the currency that they'll need to buy some of the premium items inside the game. Okay, keep that in mind. And then at the same time, Roblox does not create any of those premium items or experiences itself. It outsources these activities to third party developers to create those games on the Roblox platform. It tells these third party developers, hey, we'll let you create games and put them on our platform, and we'll pay you a percentage of the revenue that these games generate. So if your games are a flop and nobody pays any money to play them, then you're not making any money. We're not paying you a dime. But if your games are a hit and it makes, 50 million in revenue, then you'll get a percentage of that for yourself. So Roblox offsets a lot of the risk of developing games and on its platform and the cost. So you might imagine to hire all of those game developers and keep them on staff and pay them all year long would be quite expensive and risky because they may or may not develop something that customers like. By outsourcing that, they now reduce that risk And they also put the incentive on their back. Right now, those developers, they've got to create something if they want to get paid. They got to make something good if they want to get paid. If you have them on staff and you're paying them a salary anyways, they may or may not be motivated to make a hit game because, they're going to get their salary anyway. So by outsourcing it, I like that they do that, and it's proven to be effective. They've proven to have created enough incentives for those third-party developers to attract enough of them to create enough hit games that's also attracting millions of users. They've got over 60 million daily active users that spend an average of 2 to 3 hours per day on the platform. So the model is working and it's generating nice cash flows. Of course, it's not as high as it was during the earlier stages of the pandemic, but that's to be understood. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And the final reason why I'll give to get Roblox, buy this Cathie Wood stock on this dip is because of the valuation. It's never been this, well, it's arguably never been as cheap as it is now. You could see it's trading at a price to sales of 11. It's dipped below that, briefly. But if you look back a couple of years, all the way to early 2021, this is about as cheap as the stock has been, or it's at least in the lower end of the price range. So if you're bullish on the metaverse and you're bullish on Roblox stock, then this is an excellent time to buy it. That's why I say this is one Cathie Wood stock. You might regret not buying on this dip here. All right, so thank you so much for watching. That's all I've got for this video. I hope I'll see you again sometime soon.